Hey everyone, welcome to another edition of the Buddy Study Group. And today, since it's been a little while and we are, you blink and you'll miss it, we are at the end of July. That means we are entering, well, we're really right in the middle of quarter three. Uh, I think it's time for a little bit of a market review. Let's just go over today all that has changed in the market this year. So, obviously, I mean, you know us, it's going to be a lot of refresh on new products or new solutions entering the market just to make sure everybody's aware. You may have heard announcements, but not actually revisited. Some of the products that have been affected, you may have found that you're actually seeing a good number of wins with some of those products that have entered the market recently. We'll also talk about some industry trends. I would love for you guys to help me kind of fill in the blanks empirically as well. If there's just something you're noticing in your corner of things, in your work with clients, I think those are some of the best learning experiences we can have on the study group. Anecdotes really go a long way. And I think if we can tune your antenna to one or two more new solutions or just make you a little bit more aware of what's going on in the market today, I think that's a win. And I think you would agree. So why don't we go through it? I'm going to say that a lot of the major changes in the market this year kind of took place in Q1, at least as far as new products are concerned. So I think we had like a good 1 to 2 week period in there where we had like an explosion of carrier news. So I want to review some of those. So back in February, we had Essential LTC flipping over to Honest LTC. And I think there was a lot of trepidation with NGL switching to a new policy generation because some of our favorite features of the plan or features that we couldn't find in other plans were going to be leaving. But NGL's aim with this new product launch was to add some more of those benefits that we've been requesting that are very consumer centric. So just to review, um, we are now on an age last birthday instead of age nearest birthday with NGL. I think that's a fantastic change as far as I'm concerned. You should get credit for the amount of years you've lived and not be charged with an extra one if you're halfway through. Um, so that makes a big difference in kind of pricing, in a lot of timing with cases. You have a lot more time to preserve younger age with folks, and some of those um, key age milestones are much easier to deal with now. We move from a month or from a daily benefit to a monthly benefit design. So I thought that was another great change. We're generally going to prefer monthly to a daily benefit, and we see a lot of carriers, out there offering daily benefit. And I like the fact that you're able to, of course, um, deal with some of those higher cost of care days and have those covered as long as you're staying under the monthly benefit max. So another good move. We have increments of $300, ranging from 1,500 to 12,000 now. 90 and 180 day elimination period, and we have the 1 = 7. I thought that was another really, really nice change. So 1 day of paid service counts as 7 days towards satisfying the elimination period. So I think that's another really, really good one. I think that is one that I would generally want to advertise or put in front of clients, right? Um, this is Robert, this is NGL. So their 1 = 7 was something that changed with the flip over to Honest LTC. As we know, a lot of the self-funding comes from satisfying the elimination period under or for benefits we are covered under, right? So that drastically reduces the amount of out-of-pocket pay. On joint policies, each insured does have their own elimination period, though. That is something to look out for. The scope for that. There is a first day home and community care rider that was repriced. There was a 0-day option that was included in that also counts toward the facility elimination period. I thought that was really nice. So the scope for that is home care, adult daycare. And again, I think all of that is a lot of really sales relevant improvements. Inflation.
Jason,
Mhm.
are you screen sharing or no?
I'm not.
Okay, I just want to make sure.
I'm
Okay.
not. Yeah, I'm just reading off of some notes.
Okay, thanks.
But I can provide you what notes I have.
Somebody
Yeah,
asked that in the chat.
yeah,
Yeah.
I'll provide you what notes I have with the recording. Inflation protection. So 1 to 5% inflation protection. Um, Waiver of premium in the base contract. The third pool shared benefit staying intact is also another really nice piece to this. The spousal survival benefit, the survivor in the relationship can take remaining third pool benefits or drop the rider for a premium reduction. I thought that was really nice. But of course, that doesn't come without some sad news. We lost unlimited benefit periods. Um, this was, from what I've heard, due to regulation, but the 10-pay rate guarantee was cut to 5 years. Single pay was removed as well. And I think those shorter benefit durations actually took larger premium increases in the repricing. Um, but I think that a lot of these changes were really nice. They were a long time coming. I think this kind of allows NGL to competitively reposition a little bit. Um, I know they're trying to get more competitive with Thrivent and Mutual of Omaha. I think they might have gotten a good deal closer in couple scenarios. And then they had some underwriting changes. So applicants with 2 first-degree relatives diagnosed with Alzheimer's or dementia after age 75 may now apply. That's something that actually Moo can't even match, from what I remember. Face-to-face cognitive assessments are expanded to partners age 60 to 65 when a co-applicant 66 plus triggers cognitive testing, so a little bit of tightening of the belt there. Lymphoma and cancer waiting periods that I saw were cut significantly. Major depressive disorder codes are now reviewed individually rather than auto declined. So that's one of the things that can be tough with NGL is pass fail underwriting, right? Yeah, Romeo, I'll give you the notes that I have. I'll send that out with the recording to make sure everybody's got it. Um, and let's see what else we have. I think that's about it that I had for Honest LTC, but I would like to hear from you all. Has anybody, even if it's just a raise your hand, has anybody dove in to Honest LTC much? Are you finding that it's competitive in scenarios where you're offering traditional long-term care? Any sort of feedback that you guys have, I would love to hear from y'all. Well, Rhonda's an NGL superstar. What are you finding early impressions?
I love the new product because it really does put us on an even playing field with the monthly benefit, calendar EP, including the alternate plan of care. You know, I'd love to be able to offer the unlimited and the single pay, but the 10 pay. So we got what we need, but even the pricing really is not that much more considering they're rolling out a new product and you're getting all these built-in features. And they also added couples discount. So even if you have one spouse appliance, so it really is good. But so you're really getting a lot more bang for your dollars and it's really not that much more premium. The one thing I did notice is there's not as much change on going from 2 years to 3 years. It's never been a big change going from 2 to 3 years, but this one is just very minute. So
That's what I saw as well, and what I had in my notes is that 2 year benefit period um, kind of got more expensive relative to.
and if you're a partnership fan, if you believe in partnership and think that's a big thing, that's where NGL just shines because you got that whole third pool. So you got an extra bonus pool for asset protection.
100%. That's a really good point, really good sales idea. I also like, you know, that they've gotten a little easier in some states for partnership by offering that spectrum of inflation protection. There are some states that will, allow you to qualify for partnership with any level of inflation protection. Some will, have specific asks on the term of the inflation protection or the amount or percentage of inflation protection. So having that 1 to 5 option really, really helps. And I agree with you, Rhonda. You kind of alluded to it a little bit, but I think when we're talking about just competitive scenarios and comparing products, carriers with their designs can get themselves into a little spreadsheet issue because that is how initial quotes are really done, right? I mean, a majority of the market uses something like Stratecision to compare products. And if every one of your cells are different from all the competitors, right? Um, we're showing daily benefit. We're showing a different age, right? That is pricing us up higher because we're age nearest. And everything just seems to work differently next to two carriers that look exactly alike. There's going to be a lot of questions. There may be a lot of over explaining of the plan, and that becomes more difficult to sell, even if you do end up selling the product, the client can still see the value. I don't think everybody sells the same way as everybody on this study group, but a lot of people use spreadsheets. So if you're not easily spreadsheetable, you don't fit in and not for very good reason, it can be hard to compete. Not that you can't, it's just a little bit harder. Um, I agree with you, Chris. I don't like the name Honest either. Honest LTC. Um, you know, I don't see them changing it from what it is, but yeah, it feels to me just a little bit overcompensating. I know where they're going with it, right? Like we're really adding all of those sort of client-centric benefits that we should have been offered. So this is kind of in the nature of maybe being a little bit more transparent and in line with the rest of the field. But that's a piece of feedback I hear all the time. I expected to hear it. Um, yeah, that's why I'm just kind of referring to them as NGL in general. I never called it Essential LTC anyway. I just called it NGL myself. Um, so anybody else have any experience with Honest LTC? You can feel free to throw your thoughts in the chat or speak up, interrupt me. Not a big deal. I'm always happy to be interrupted. But what I want to just kind of make clear in this market review is we saw changes with all product types, essentially, right? Changes or new additions. And so the next one's an annuity long-term care change. This was also in February. This was Nationwide's Care Matters annuity. And I'm interested to hear your guys' thoughts on this because this is really a new offering. Like Honest LTC, I kind of consider a new generation. But Care Matters annuity is altogether a brand new long-term care solution for Nationwide as a whole. Not that Nationwide doesn't have annuity products, but one that's geared toward LTC. I really like to see carriers getting a little bit more horizontal, offering different solutions in the market. I think it's really encouraging, means there's demand that they want to meet at the end of the day. And it means that they are dedicated to the long-term care market. You know, we want to be able to help people of all different shapes, sizes, and ages, right? So I thought this was great. Um, and I like the design that they're working with, you know, the cash indemnity annuity long-term care plan really looks a lot like for care to me as far as how they do their underwriting with a 2 or 3 times long-term care benefit multiplier. Um, and underwriting is really the key for this product for me because they are targeting over a 90% acceptance rate. I think it was somewhere between 90 and 95 that they're targeting. So, you know, that can inspire a wide range of emotions. I think as long as the product is designed and priced responsibly, that can absolutely be something that's very doable, of course, because we see Equitrust Bridge with guaranteed issue underwriting. But they are going to essentially underwrite you for number one, outright acceptance, but also for contract value. So preferred, standard, and select are their underwriting classes, and select is really for those in the older ages. So the max age on this is 80 years old. Obviously, kind of one of the obvious reasons why you might get into the annuity market is to maybe reach some of those older ages. And in those older ages, we generally have health challenges. So if we can kind of pull the right levers on the underwriting side to accommodate those people, that's kind of a brand new market share we have a play on, right? So based on how you get through underwriting for those ages 40 to 74, preferred gets you 3 times the contract value, which gets you 72 total months of long-term care. And if you're standard, it's a 2 times. So just to keep it really simple, you underwrite for 3 times or 2 times. 2 times is going to give you a total of 48 months. And then for select, those who are ages 75 to 80, it's also a 2 times, but they spread it out over a longer benefit period. So they're not going to give you as high of a monthly benefit amount, but you got 6 years of benefit there. 6 underwriting questions. And actually, what I have from my notes is 95% approval target, guaranteed 3% crediting rate, 2 of 6 ADLs, 90-day elimination period, and they've got that retroactive elimination period payback, which Nationwide kind of pioneered. So you get through the 90-day elimination period, you get 4 months of benefit in that very next month when you start receiving benefits. So that is nice, takes some of the sting out of having the elimination period. 100% of long-term care benefits available internationally. Let's see here. What else did I have? We had that benefits continue to inflate while on claim with Care Matters, but with the Care Matters annuity, benefits actually lock in once on claim. Again, that's probably a plan design aspect that allows them to go after a 95% acceptance rate. So that's one thing just to be aware of. Pretty limited on state availability for right now, but will definitely be expanding over time. And let me see if I have any other internal notes here. But did anybody have a good, bad, indifferent experience with Care Matters annuity yet? I know annuity long-term care in general in the market is definitely increasing in popularity. There's a lot of people out there that hold annuities, 1035 exchange, Pension Protection Act, always a good sales idea. Have you guys used much of the Care Matters annuity to this point? And if you have, what were your thoughts on the experience and how it stacked up? I'm just looking for some more notes here, but feel free to
Jason, it's Diane.
hey.
Hey. So one of the things with the Care Matters annuity is if you're transferring from a different annuity, they say you have to have a less than 8% surrender charge. And I was able to, with exception, transfer a Secure Horizon Plus annuity with a larger surrender charge because it wasn't a long-term care rider. It was a life insurance with a chronic illness rider.
Right.
So
Okay.
we were able to go over the head of the regular route and get approval to take the bigger surrender charge because it was getting him to 3 times the value instead of just the value of the annuity. So there's things you can do talking with them if you're close to somewhere, they'll work with you.
That's good. I appreciate that. That's definitely a helpful case study, and it's always good to know like where you can speak up and ask. It never hurts to ask anyway.
Right.
But knowing where you're going to have a better chance really helps. So I definitely appreciate that. I also had noted that there was an upfront separately identifiable premium, but for riders only. So I thought that was an interesting play there. Let me see what else. Legally married spouses can continue the Care Matters annuity contract as an option without long-term care. Also pretty interesting. And this is a product where I think Nationwide's also taking notes from One America's book, right? What One America is really good at is when you have an asset care decline, generally they are going to follow up or in that same breath, in that same email, provide you with an annuity care offer if your client will qualify. It will take some time, and I think they've gotten a handle around this already. It's that Nationwide's going to look to do the same thing with any Care Matters life hybrid declines. So that's nice to have an automatic sort of follow-up option. And I think the way they see it is we're targeting 95% approval on this annuity product. If your client applies for Care Matters life hybrid and doesn't get an offer for Care Matters annuity, we probably should have done more field underwriting before we submitted or some sort of just crazy aberration. So I think you're going to see more and more of that. Let me
Hey,
let me
Jason,
pitch you. Yes.
can I just add on to that as One America is automatically going to test you for the annuity care.
Yep.
On the Care Matters, they're trying to get to that level as an automatic review. Just make sure if you do get a declined or seems to go decline, it doesn't hurt to ask either
Yeah.
ask your case manager or ask your RVP to review it for the annuity care because it's just not as fluid as One America right now. We do quite a bit of One America in our shop, and it always helps to ask that question with Nationwide, where it's automatic for One America. I just want to throw it out there. Because
I appreciate that.
being a newer product and newer, I guess, underwriting process. Sometimes you get an underwriter or a case or a new business associate that isn't, I guess, as proactive. Love them to death, absolutely love them to death, but just it would not help say, hey, did this get reviewed, or can you review it for the Care Matters annuity real quick for me? It would be a good conversation.
Yeah.
I want to add that.
Yep. Yep. Appreciate that. And that kind of is consistent with what I had heard that in some cases they may, and in other cases they might not immediately, but that doesn't mean your client is also declined for the annuity solution. So yeah, I agree. Speak up. And Alan Gregoire runs a pretty tight ship, so I have a feeling in no time you're going to see people trained to a level where you get those follow-up offers on the regular. And then I just want to do a quick review of health questions with you guys. So let me pull that up. These are the 6 underwriting questions, and I can kind of pull them up a little bit. So they talk about kind of your sort of traditional knockouts here: hospitalization, confinement to a bed, residing in a care facility. And then they ask about all the durable medical equipment. So walker, wheelchair, oxygen, dialysis, not unlike what we see on other applications. They ask about ADL assistance, right? And then they're going to ask about specific conditions in the past 5 years: MS, Parkinson's, paralysis, muscular dystrophy, ALS, Huntington's disease, back surgery with ongoing pain, memory loss, any sort of cognitives, COPD with tobacco use, cirrhosis of the liver. So these are pretty serious conditions in many cases that they are asking about here. Surgeries, hospitalization, treatments, or tests that weren't followed up on that were recommended in the past 5 years. And then they're going to ask about a longer list of conditions in the past 2 years. And they're going to ask about diagnosis, treatment, prescription for any of those following conditions. And essentially, the way they run the underwriting is pretty darn straightforward as far as I am concerned. Let's see what I had here. It was, I believe, 2 yes answers. If you only have 2 yes answers out of those questions, you can qualify for preferred if you are under the age of 75. If you have 4 yes answers, you can still get standard. So you saw the questions. You've seen a lot of underwriting processes, pretty darn liberal to be able to qualify for standard. 5+ yes answers is a decline. So pretty easy to understand. Nice positioning in the market, and a great carrier getting into the long-term care annuity space is something that I really enjoyed from this year. And then I said we're going to cover a lot of product types. Moving on from Nationwide, we have Aetna's Recovery Care Choice. So again, kind of an enhancement on Aetna's original recovery care. And yes, Robert, to answer your question, you still could get approved in that case. So Aetna's Recovery Care Choice really raised my eyebrows about the short-term care market. Not that we haven't seen a lot of things that have raised eyebrows in the short-term care market, but we're seeing pretty bold product enhancements coming out of this marketplace. Again, you might not be too close to the short-term care market because you work locally in a state where short-term care is not available or just hasn't hit your radar, not something your clientele normally gravitates to. But Recovery Care Choice raised their maximum daily benefit to $700 a day. That is quite a lot of benefit. I know all of us saw that and said, you got to be kidding me. It is real. $700 a day is their maximum. And let's see. One of the other things I liked was that they allowed existing clients to buy up to that maximum with a 15% discount. I thought that was really interesting and an in-force sales opportunity worth looking at. They have benefit periods or covered days of 90, 180, 270, or 360. Elimination periods at 0, 20, or 100 days. Most people who are working in short-term care will generally say, let me, just 0-day elimination period for, again, such a short-term benefit. Try to max out covered days and see how high up you can get on that daily benefit. Home care indemnity rider up to $2,100 a week. Family and friends can receive 25% of that benefit if they're providing services. And inflation protection is available, 3 or 5% simple or compound. I thought that was interesting, given that you can sort of buy your own inflation protection, build in your own inflation protection with such a high daily benefit. And then I saw an unbelievable amount of add-ins with this product, and I think we're going to continue to see that more and more in this market as we're seeing a lot of especially like Medicare Advantage, Medicare supplement carriers looking to add short-term care products, and just the nature of the senior market, maybe Medicare age for many products out there have a lot of different add-in benefits. And this product was really no different as far as I was concerned. So they had a prescription benefit with a $300 annual max per policy year. They have a home modification benefit, 30 visits a year for adult daycare, 20 mental health visits a year, Medicare Part B excess add-in, bed reservation, outpatient rehab, pet boarding was another interesting benefit that they had if you have to go into a facility for a specific amount of time. So a lot of really interesting add-in benefits, and that is not all that's on the list. So there's a lot that you can really look to and piece together a benefit that works for you based on your situation. And let's see. One of the things that I always want to make folks aware of, pre-existing conditions generally are not covered for the first 6 months, but excludes mental or nervous disorders and substance use disorders. Let's see. Obviously, it's pretty lenient underwriting, no height, weight. But you got to be able to get through the knockout questions. Let's see. I think they were available in about 20 states as of the last time we discussed them on the study group. I don't know if that number is increased. I'll go back and check on that. But what do you guys think? Whether it be Aetna or whether it be the short-term care market as a whole, I think there are many folks who are on the side of the fence that, given some of these like bold benefit options that they're rolling out, extremely high daily benefits, inflation protection, restoration in certain cases if you meet certain conditions of the benefit. It seems as if short-term care is inching ever closer to providing the same amount of benefit as long-term care. Wish they were available in more states. Yeah, I think we all wish they were available in more states. They provide a really unique and interesting sales opportunity, right? Not only for folks who have underwriting challenges, but I also think affordability on a pay-as-you-go premium is really in demand. And of course, not every client is going to purchase a $700 a day benefit with 5% inflation. As a matter of fact, most won't. So it is a nice offering to kind of have in your back pocket. But has anybody written Aetna much lately and have any thoughts on it? I think Aetna and Manhattan Life are kind of the two biggest competitors right now. I would not be surprised to see more competitors over the next 12 months. It could not happen, but I think there seems to be a lot of competition for that market share. And of course, Bankers Life and the way their fundamental and fundamental plus plans are designed to look very much like short-term care and, achieve very wide state availability because they are still technically traditional long-term care. I think that's going to inspire a ton of competition that short-term care really started, right? So one of the pieces of the market I'm actually most interested in kind of keeping my finger on the pulse of. But again, not available to all states. So that's why I think we might see some traditional carriers, the bold ones, maybe try to enter that market and compete a little bit. Beyond that, Securian. Securian did have a new release, Secure Care 4, at the beginning of this year. And I think one of the coolest things was just the way they were able to announce Secure Care 4. We added a number of different benefits and we didn't increase rates. How often do you hear a carrier say that when a new policy generation comes out? It's very, very rare. And so what I saw as far as benefits added, death benefit is now at least equal to premium paid at all ages. So I thought that was, um, pretty interesting. So your death benefit always meets or exceeds your cost basis. That's pretty nice. New 20 pay option. I know there have been a lot of folks waiting for more good options for 20 pay. I hear about that quite a lot. Maybe I don't have the capacity to pay it all off in one shot, but I'm not the kind of person who wants to pay year over year. I'm, middle class, upper middle class as far as income, assets, what have you. A 20 pay seems to fit really nicely in there. I do find that some clients can't stomach a 10 pay, but could look at a 15 or 20. So I really like that 20 pay option. More premium payment options, the better, as far as I'm concerned, because we can really dial into what fits individual financial pictures for everyone. The most important thing is feeling comfortable paying the premium. Adapting the nationwide retroactive elimination period payback, I thought, again, was a really, really good move. As opposed to offering a 0-day elimination period, I think it's interesting. The client does still have to self-fund for that 90 days, but they get that benefit paid back on the 91st day. Thought that was cool. 100% international benefits. We do absolutely love that. But at the 50% rate, I believe. Cash indemnity, of course, just continues to be huge. All policy designs now include the waiver of premium rider. Thought that was great. Paid up options if premiums are not continued. No new underwriting updates that I saw. But of course, for those of us in California, we're staying on Secure Care UL. No plans for New York, as we hear with most. And there are still a few states that remain on Secure Care food. But I think, again, just like really, really smart tune-ups to the product. Like the other guys are offering it. Why can't we kind of, adapt that into our product? They're not huge, flashy updates, but they're practical ones that make sense. And without an increase in premium for any rate cells, I think all the better. How have you guys been enjoying Secure Care 4? Have you been enjoying Secure Care 4? Or are you finding it's not necessarily fitting the bill for your clients? Feel free to shout out and let me know if you've had a good, bad, or indifferent experience. But in this hybrid market, it's all about competition. You'll notice that most hybrid plans look very similar to each other, and it's moving more in that direction. A carrier will come out with a really innovative benefit. Maybe they realize a little bit of an increased market share for that. Other carriers say, why don't we just level the playing field? So it's going to be, in many cases, very little differentiations, whether it's pricing or one tiny little benefit or a payment mode that was offered with one carrier and not another, that can really make the difference. So always a competitive market. Let's see. Anybody with anything on Secure Care 4 before I move on?
Jason, the only thing I have, this is Diane, is
Yeah.
that it's really helping some of my younger people be able to budget that 20 pay in and fit. And that waiver premium just is kicking it. because the only other one with a true waiver of premium is One America, who cost that much more.
Yeah.
So that helps a lot.
Yeah. Small changes, but really smart changes. I think it has taken a bit, but the hybrid market is now able to accommodate more folks than ever. I mean, if we look back 10 years, right, we're looking at almost a single pay market only, not completely, but it's almost like to get the really good value out of these plans, you got to have the capacity for a single pay or at least a 10 pay, right? So this increase in flexibility is something I really, really like. Let's see. Robert says, going back, they changed nationwide to servicing nationwide annuity, right? Not sure what you're asking there. Robert, if you want to provide any clarification, I'm happy to take a stab at it though. All right, we are running out of time. I think the one other super major piece to this, as far as product updates, was Equitrust Bridge. So we talked about Care Matters annuity targeting 95% acceptance. Equitrust Bridge, obviously uniquely positioned as a guaranteed issue underwriting annuity long-term care carrier. And really underwriting you for higher leverage from there. Fixed index annuity product, 7702B long-term care. There's a lot that's differentiated about Equitrust. And again, just some tune-ups to the product. Minimum issue age dropping from 55 to 50. Huge, because folks at younger ages have underwriting issues as well, and may very well be holders of annuities with significant cash value, right? So that can really swoop in and help a lot of folks in that age segment. Guaranteed benefit base roll-up increased from 2 to 3% compound annually for 20 years. Always nice to add a little bit extra value to this plan. And this is going to get really, really technical. I will have you refer to our study group recording with Tommy Johndall earlier this year, where he talks about the coverage ratio leverage applying to all premiums paid in the first 5 years rather than the first year premium only. So it's really going to open you up to a number of different strategies where you're not necessarily just paying it up in one shot, or have the ability to kind of add premiums on top over the first few years. So you got to think like RMD strategies are potential there, or specific staged contributions can be pretty nice. And there were some changes to the Never Stop Wellness program, which I know had some growing pains as far as the process goes, but as far as how those wellness credits are applied, that has changed around to kind of increase their value. They obviously want people to be using Never Stop. And let's see. We did get some news from them that about 70% of applicants currently classify as preferred, which is their highest health rating, which I thought was really interesting and encouraging. So obviously not just a solution for clients who cannot get any other solution, no matter how hard they try, but can also result in high leverage for folks in decently good health. Thank you, Gretchen, for sharing that reporting.
You're welcome.
Appreciate it. And let's see. Did I have anything else on Equitrust? I just think this product is really, really cool. Interesting design. Obviously helps a lot of people. You have to have the capacity to fund a plan, either from a 1035X or a single pay or a very limited sort of multi-year pay. but still continues to be a product whose name gets brought up a lot just because there's a number of really good sales opportunities that come up from it. But I think those are the major items I wanted to cover today, and that takes us right up to about time. Did anybody have anything else interesting from this year? Observations, any other products to put a spotlight on before we wrap it up and send you on your way? I highly recommend you check out that recording that Gretchen put in the chat too. Tommy really knows his stuff and did a wonderful breakdown of how Equitrust works, and that's a product you need in your portfolio for sure. Alrighty. Well, I hope you guys enjoyed. I hope anything that was brought up today gives you another reminder, reason to take a second look at a product, makes you think about a client that you have in mind that could benefit from any of the information here today. And thank you all for sharing your experiences with some of these newer products this year and how it's going for you. Really appreciate that. Helps the conversation a lot. And that's all I've got for you. So be well, be good, and we'll see you this time next week. Thanks, everyone.
Bye.